right, what's up, guys? We'll get started in a minute. And happy Monday. DC 322, Ren 1018, Richard Scott, Lance, Troy Atman, Doc 7, what's going on? Ivan, Alan, it's good to see you as well. The one and only Jeff from Southern Tier, New York. Thanks so much for joining us and welcome to Midtown Manhattan, everybody. On 57th Street, Billionaires Row. It's a beautiful night in the city. We'll get started in just a moment. Bang this right here on 5th Avenue and 57th Street. Herbert, Sally, John, Lemonade, what's up? Michelle K. WH7 and Victor C. Andrew O'Donovan, thanks for joining us. I think we'll just do the quick audio and visual check as we always do. I do want to give a little bit of a forewarning though. I do not have the mic tonight. So we are going to be without a microphone for the duration of the broadcast, but it doesn't seem to be too windy, so I don't think it'll matter. Hopefully I didn't speak too soon. But it should be a pretty action-packed live stream tonight. As we all know, really great action here in the markets. And we'll just be doing a quick markets recap with a specific focus on a lot of the leaders, right? We'll kind of take this sector by sector. If you were joining us for the live stream that we did on Saturday night, we didn't have one Sunday, but we kind of were talking about hope of a broader market participation. I think that maybe the internet is out. Let's see. Let me see if I can get it back. There's a lot of construction going on here, so. Well, there is a lot of finance leaders in the city today. There was a big conference at the Lockout Tower, New York. You had the CEO of Apollo Global giving a keynote speech. You had CEO of Pershing Square, Bill Ackman, gave a keynote speech as well at the Lotte, New York. And then you had Dan Tapiero, who's the founder of 10T Holdings. We'll kind of do this loop by Central Park South for a minute. Hey, Ricardo 305, what's going on? Good to safe. But in any event, last week we were really talking about how we would hope this market would start to really broaden out to more participation, and I kind of mentioned specifically the semiconductor index, or the SOX. But today we pretty much got, I mean, talk about broadening out. This is probably the most broadening out that you're going to get. And, you know, we've talked about, you know, 3 weeks ago now when this market bottomed, we got those 2 follow-through days, and how you have to add risk. You have got to add exposure on the follow-through days. And not every follow-through day is going to work and lead to a new bull market, but there's never been a new bull market without a follow-through day. So I think it's pretty appropriate to kind of reflect on the market we've had so far, because it is actually a little bit out of character in some ways, but in other ways it's very much within character. Now, in ways where it's kind of out of character is, you know, we got those 2 follow-through days and they both worked and the market was off to the races. And a lot of the ideas that we were putting on started to work immediately, right? Usually you have, you know, follow-through days that fail, and you're going to be whipped in and out of a lot of stock. But once we got those 2 follow-through days, pretty much all of the names that were up and out really started to work, and work immediately, which is a very good sign. So I would say your leaders in the market are like your Netflixes of the world, which are actually now extended. So we were reviewing that, you know, I wouldn't be surprised that this week you start to have rotation out of the leaders who are out of the gate first, and into some of the tier 2 names is what we call them, right? And that's actually exactly what we had, at least so far, right? It's only Monday. If you look at the price action in the market on those true market leaders that were the first ones out of the gate, right? Spotify, ticker symbol SPOT, and Netflix. Those are really the 2 liquid leaders in the market. You actually saw they were actually down on the day today, while everything else was up, and that's actually very normal and very in character for market action. Now, you also had a lot of the tier 2 names perform very well. Specifically Uber, right? You had Uber not only close at the high of the day, but we had a new all-time record high close for Uber today, breaking out of that cup with handle base. I think we closed exactly at $88.10. Now, just in full disclosure, I have a position in Uber, and today was one of those days where it gave you great opportunity for an entry, or a secondary entry to ladder up and in. So you have that big volume in the morning. The stock acts great throughout the day, but during the last 30 minutes of power hour, if you start to see that stock, you know, catching a bid, you can pretty much fill orders all the way into the close and run that stock up into the highs. So just really positive action on Uber, which is a company that I would put into the category of a tier 2 name, right? You know, new all-time record highs, new 52-week highs today. And speaking of the Sherry Netherland Hotel, which is right here, Jesse Livermore, big round number 100, that's probably where that stock is going to run, right? So again, you have the culmination of the fundamental characteristics that we look for, right? Earnings growth, revenue growth, you know, pre-tax, after-tax margins, and institutional sponsorship. You know, that wasn't, you know, your retail trader, mom and pop guy or girl buying that stock today. You know, those institutions were really running that into the close, and you could have been filling orders right into the close. I built out my position in Uber all the way into the close. I was getting filled all the way to 4 o'clock. So what I want to do briefly, because I think tonight's only going to be about maybe an hour and a half stream, I want to start off with the big picture, okay? Because as we've reviewed, most people are kind of still caught up in bickering and in fighting and arguing with each other about, you know, the tariffs and the politics of it all, which I think is probably the worst thing to do, because you're missing just a generational opportunity to really compound out your account here. So the main tell, right, to review that the tariff news is really already priced into the market, and it has been priced in for the last 2 weeks, is really looking at the VIX, right? So over the last 2 weeks, the trade in the market, the big trade, has really been the short vol, right? Short volatility was the trade. And if you pull up a chart of the VIX, maybe you pull it up on a daily or a weekly or whatnot, you'll see we blew off to about 60. Now, for some context, during the pandemic crash, you had a blow off in the VIX to about 80, which, you know, conceptualize that for a minute, okay? When the VIX blew off to 80 during the pandemic, the Wall Street Journal, I mean, I was getting the paper every morning, literally from this apartment. That used to be my apartment, this little window right here. And, you know, my doorman would drop the Wall Street Journal off to my apartment every morning, and I'd pick it up, and it would say the death toll counter, you know, of how many people are dying of the coronavirus every day. And it was really freaky, and nobody really knew what was going on. Everybody at the time, I mean, there was a point in time where I thought, like, you know, half the people I know were going to get this thing and either get severely, severely sick or die, right? And the VIX was 80, right? Thinking about a total global shutdown and mass death. Okay, like a Black Plague style mass death. The market reaction of the Trump tariff crash, or tantrum, whatever you want to call it, crash, I think it's appropriate, right? We blew off to 60 for some tariffs being thrown on, right? Markets tend to overcorrect to the downside, and they tend to overthrow and get irrationally exuberant to the upside. So the VIX blew off to 60. It closed today at 18, right? Total collapse in the VIX. And it's been collapsing for the last 2 weeks, right? And I kind of posted a chart of the VIX on X. If you're not following us on the X platform, you could do so by following at Walks Wall Street on X. And you also had the put to call ratio really going to Mars. And this was a mass panic of people just dumping their stock. So once we got that follow through day, the first follow through day we got, I looked, the VIX was 37. Okay, so 60 to 37, that is a significant collapse in the VIX from 60 to 37. So adding exposure there kind of was, you know, already telling you that the market priced all of this stuff in, but the news and the headlines were still so dire about all of this stuff. And the names right out the gate, they're now extended, you know, 10, 15, 20% above their major moving averages. And we already went over those, right? The leaders, the liquid leaders in the market are Netflix. Maybe you could even throw Microsoft in there, but it's not at a new high yet. But it's definitely Netflix and Spotify. Now, you're starting to see a real broadening out of the market here, with a lot of names above their respective 200-day moving averages. So it is very critical, and I'm trying to figure out the most appropriate way to explain this. Now that the market is really broadening out, you don't want to bottom pick all the junk. And I would even go as far to say that the junk in this market right now are the names who have not made it back above their 200-day moving averages yet. So I made a list of the Fang stocks, okay, the big Fang names that are above and below their 208. So I'm gonna kind of give those names to you all now, and then we'll just do a quick review, and you'll kind of understand the context as to why we're talking about that. Okay, so the Fang names, okay, that are currently above the 200-day moving average are as follows. Microsoft, ticker symbol MSFT, Netflix, NFLX, Amazon, and Tesla. Those four are above their 200-day moving average. Now, we need to do a little bit further analysis and rank those names based upon the dates that they crossed their respective 200-day. First out of the gate was Microsoft, so that is number one tier. Number two tier was Microsoft. Big gap up after that great earnings report. Microsoft Azure cloud revenue coming in better than expectations. Gapped up about, I think it was 15%, held the gap, and then ran 3 days after. That is a key tell of institutional sponsorship in that name. And then I would say, I'm reluctant to do this, but I would rank Tesla above Amazon. And I'll kind of go into why. Obviously today, Amazon was up big time because of the China tariff news and all that, right? And Amazon has significant exposure to China due to all its, the cheap goods and e-commerce. But the reason why I rank Tesla higher than Amazon is because of the abysmal earnings report that we got out roughly a week and a half ago. Okay. Now you may be asking yourself, well, that doesn't really make sense, right? If Tesla reported horrible, piss poor earnings, which they did, why would you then rank the price action of Tesla above Amazon? Well, I'll tell you why. It's the reaction to earnings. It was so impressive. By and large, all of the Fang stocks, the big tech companies, fared pretty well this earnings season, right? Record profitability, particularly the likes of Microsoft, Meta, and so forth. But Tesla bottomed on a poor earnings report and proceeded to run over 25%. That's kind of the market telling us that there's going to be a major paradigm shift at Tesla and with Tesla. Now, I don't know what that is. Now, maybe Elon kind of getting pushed out of the whole Doge, Department of Government Efficiency. The market loved that, right? Regardless of your political stance and opinion, by Elon Musk being the face of Doge has really tarnished the Tesla brand, and it has. Okay, it doesn't matter if you agree with his political stance or not. It has. So the culmination of the reaction in the stock to poor earnings on the back of the coinciding news that Elon is really going to take a step down out of the public eye in government, the stock is going crazy. And I wouldn't be surprised if you see Tesla back at new all-time record highs by the end of the summer, as crazy as that sounds. And I know this is a long introduction, it's going on 20 minutes, but I think it's going to be a short stream tonight, so we just got to blow through these. Now, here are the big Fang stocks that are below the 200-day moving average, and this is even more critical to pay attention to. You have Google, GOOGL, is a major laggard out of the Fang stocks. I'd stay away. And Apple, AAPL. There's multiple reasons for that, right? I think the main two reasons for Alphabet would be due to the AI revolution. Many people think that the Google search business, which is very, very lucrative in terms of advertising revenue, is going to diminish because people are using chatbots like ChatGPT, Perplexity AI, and even Grok, right? And then Apple, we could have a 10-hour long conversation about Tim Cook, but a lot of people are very, very upset with the innovation coming out of Apple, specifically as it relates to their AI product and services. which Tim Cook came on the earnings call and essentially told investors to be patient, and I'll paraphrase here, but Tim Cook said something along the lines that we don't want to release anything because it's not up to our very high standards. Yeah. I mean, that's neither here nor there. And then lastly, NVDA. Now, NVIDIA is still sitting below its 200-day moving average. However, what we said on Saturday, the beginning of that broadcast, is this week is going to be critical to watch for a rotation and participation into the semiconductor sector as a whole. Now, if you look at ticker symbol SOXX, we had really great participation there today. The semiconductor indice is sitting just like 4 points below the 200. And there's 3 semiconductor companies that are trading above the 200-day, and there's 2 trading at 52-week highs. And the number 1 leader in that sector is Broadcom right now, AVGO. So even though that is, kind of like a mind-numbing exercise to do, the reason why we do that is because it is so critical as the market is making a transition from a bear, right, and a pretty severe bear market we're coming out of, to a new bull. It is critical to be super, super selective, right? If you're managing a portfolio, if you're a stock picker, that you do not, play around with the tier 3 and the tier 4 names that are still kind of stuck in the mud, right, below their respective 200-day moving averages. The stocks that are right out the gate into new highs, above all major moving averages, those are the ones that the institutional investors, right, or the composite operators in the market have not only chosen to buy, but even more critically have chosen not to sell during the drawdown. So it is so, so critical that, you even do this exercise yourself. If you're looking at a specific company, right, if you're looking at a specific stock, knowing that the S&P, the NASDAQ, and the Dow are below their all-time record highs, right? It's important to look for the individual names that are leading, and you stick with those and you ladder into them, right? Like Uber today, great action. We'll talk about a few more, but anyway, that was a long intro, but I think it was well needed. I'll go ahead and say hello to everybody in the audience, and hopefully everybody had a wonderful Mother's Day. Noodles says NVIDIA is still down 20% from their 2-year high. I see TD, Teresa Diaz is here, Austin City Limits. UniJ23, what's going on? Thanks so much for joining us. Lance is here. Andrew O'Donovan, welcome, welcome. Addie Lou, Incognito, DC322. Thanks for joining us. Oh yeah, that's right. We have the CPI numbers that are coming out tomorrow, right at 8:30. That should be an interesting catalyst for the market. RJ is here. What's going on? Good to see you. John Roberts, NAB 407 in Mel. Thank you so much for joining. Now I want to kind of quickly go into a few other things that I think are relevant. And again, this is just opinionated stuff, but I've been getting a lot of emails and a lot of people commenting and kind of going back and forth with me on X about, people still think, I'm waiting this market out. I'm still in cash. I'm going to wait till, the coast is clear with all this. I'm going to wait for more certainty. And the reason why you can never do that, right? You can never, ever, ever wait for 100% certainty, because if you do wait for 100% certainty, you've essentially missed all the move, right? Markets don't bottom on 100% certainty. Okay, markets bottom on extreme, like unbelievable, the sky is falling fear, right? So if you remember the day this market bottomed, I think it was April 7th, I believe it was the exact day. Like, just think about how crazy that day was, right? If the sentiment was just unbelievable. I was getting unhinged emails. People were going really, really crazy. You know, the VIX was at 60. You know, you had, if you turned on CNN, they had that guy, the Einstein of Wall Street, on with this other analyst. And this isn't a knock against them, but it's like, when do you have the Einstein of Wall Street on CNN primetime, right? And he's saying, we're gonna have no food on the shelves. You know, this is gonna be just like the pandemic. You're not gonna be able to buy toilet paper. You have to go buy canned food. It was just like the most crazy shit. Excuse my language. And that is the stuff you see at the bottom. You know, you had CEO Pershing Square, Bill Ackman, you know, writing this, you know, 300-page diatribe on X about how Howard Lutnick has pulled off some unbelievable conspiracy and how he's using Cantor Fitzgerald to make money off of his bond position by purposely crashing the U.S. economy. Like, it was, and then he came out 2 days later and like made a public apology. It was like the most bizarre, it was like bizarro world, right? And that's how it is at the bottom. It's bizarro world, right? Things that you see at the bottom are, you know, a running death toll counter on the Wall Street Journal front page every day, right? That's the kind of craziness you see. So if you wait until the coast is clear and the sun is out, you know, to go outside, you're just gonna get a bunch of sunburn, right? But if you prepare before and the market follows through, you get that follow through day, you buy your top names, right? The names that are trading at 52-week highs, the names that are coming off, you know, 3 to 4 beat and raise earnings reports, and you just buy and you get in and you size up, you are actually going to have a lower risk reward, or you're going to have a higher risk reward, right? If you wait till the coast is clear, you're going to get smashed. So it's important to follow the market, right? The VIX is at 18 now, guys, right? So it's very, very unlikely that this market makes a new low. It's like almost to the point where you could say it's not going to happen. If you have a move from 60 to 18, I mean, what more coast is clear do you want? You know, now we have major indices, right? The S&P 500 today, for the first time, closed above the 200-day. So what I think we're seeing in this market now is there's a lot of money managers on the street that are severely underinvested in this market, and pretty much have no exposure to the leaders. And it's even more apparent to retail investors and traders that have made significant capitulation at the bottoms, extreme selling all throughout early April. Hey Paul, what's going on? Sunshine Vibes, Pineapple Water is here. Oscar D, thanks for joining us. Andrew says, I think Scott Besson has done a tremendous job of keeping everybody cool and calm during the last couple months. Yeah, I have a lot of respect for Scott Besson. He's a really, really sharp guy. And I don't even really know him from politics, right? A lot of people are just getting introduced to Scott, but he is arguably one of the greatest money managers on Wall Street, right up there with Stan Druckenmiller and Paul Tudor Jones, which, by the way, speaking of Paul Tudor Jones, he was on CNBC just 2 days ago saying that he thinks that we're going to get a new low, right? And that's literally the greatest, you know, global macro position size trader of all time, right? Paul Tudor Jones coming out on CNBC and saying this market is going to make a new low. And I was like, damn, when I saw that, I was like, oof. I mean, that one hurts because, I mean, Paul Tudor Jones is like, that is essentially how I model my portfolio after. And I'm like, you know what? I think he's wrong. I mean, we had these 2 follow-through days. The leaders are acting great. And it's not just like these leaders are getting bid up. They're getting bid up in sick volume. I mean, again, that's why it's very, very important to watch the market. So, you know, we'll see. Now all major indices are above the 200-day by a wide margin in just 2 weeks. We've rallied, I think, 23% from the lows in just 2 weeks. Guys, there is a ton, and I'm telling you, okay, a ton of money managers on the street that are going to be chasing alpha all throughout the year because they have no exposure to this. And this is what creates lockout rallies. If you go back and do a post analysis, and I did this over the weekend, I did this late Saturday night after I did the stream. I want you to pull up the NASDAQ 100 right as we were emerging out of the pandemic and put up a 21-day moving average on the NASDAQ 100. We didn't break the 21-day for almost 7 months. The NASDAQ 100 rode the 21-day moving average for 7 months straight up into new highs without even a mere like 5% pullback. That is very possible that that happens. It's called a lockout rally because now that the indices are over 200, you know, funds and hedge funds on the street need to start getting exposure to this, and they are well underweight these names. So things can get crazy, and if you're positioned right, I mean, my God, we're up 23% from the lows. Just on a beta weighted comparison, some of these TMLs are going to go up 200-300% this cycle. Just like what happened from the transition of the 2022 bear market into 2023 and 2024. A lot of these TMLs just absolutely ripped. Oh wow, Cosmo, what's up? I didn't know the Knicks were playing tonight. Maybe we'll have to navigate down to Madison Square Garden, because every time the Knicks win, they have like this crazy, like almost like flash mob outside, which is pretty interesting. I see Vincent, 23. What's up, Vincent? Hopefully you're doing well. Thanks for joining us tonight. DC322 says Jerome Powell is more level-headed. Oops, let me see one thing. Then Besson and Lutnick. Yeah, and I mean, I think he's done a pretty decent job, right? I mean, we heard from the Fed last week, and I think that was the right thing to do, not to cut interest rates, even after the lambasting from President Trump. He's really been on Powell's case, but I think Powell is doing the right thing here. I tend to agree. Oh, that's right, Alan. Did you see Coinbase to replace Discover Financial in the S&P 500? I did. That was breaking news just a few hours ago, I think, right at the close. I mean, think about that for a second, right? Think about what Alan just said. Coinbase, okay, to replace Discover Financial in the S&P 500. Now, if you go back, and then we'll kind of transition into our conversation about cryptocurrency and Bitcoin, right? If you were to go back in time and you were to make an appearance on CNBC and you made a prediction, in 2016 even, or 2017, and said, there's going to be one day where you're going to have companies that service the Bitcoin and cryptocurrency ecosystem, a part of the S&P 500, a pure play crypto exchange is going to be a part of the S&P 500, people would have laughed you out of the room, right? And you would have never been invited back on CNBC ever again. Now that's quite literally a reality, which is wild. And this is only the first step. So it is huge news that Coinbase is now a part of the S&P. Now, what I think is even bigger news, right, to kind of piggyback off of what Alan is saying, and I'm kind of kicking myself because I didn't know. So today at the Lotte Tower, Lotte Palace, New York, there was a big conference, and the CEO of Apollo Global did a keynote speech. You had Bill Ackman doing a keynote speech, and then you had my friend Dan Tapiero doing a keynote speech, who is the CEO and founder of 10T Holdings, which is he's going to make a fund called 50T Holdings, which is essentially the bet is that the whole cryptocurrency Bitcoin ecosystem becomes a $50 trillion market, which I think is very attainable. And they invest specifically in private companies who support the digital asset ecosystem. And one of his main predictions is that you're going to start seeing a lot of these private companies that support the digital asset ecosystem start to go public and hit US exchanges. Galaxy Digital, right, which trades on the Toronto Stock Exchange, is listing on the NASDAQ. I think it's either tomorrow or the next day. Galaxy, which is Mike Novogratz company, which is essentially a company that assists institutional investors to get exposure to Bitcoin, crypto, and digital assets. You're gonna be able to trade that on the NASDAQ. You gotta pay attention to this. I think in 12 months time, you are gonna start to see the first few tricklings of IPOs servicing the crypto markets. And that is a huge deal.
I'm sure
a huge deal. So if you look at the price action of Bitcoin, I think we're 102,000. I think we hit an intermediate term high of like 105,000 overnight. And then we had a little bit of a pullback, but I mean, if we break those highs, you know, you're talking about, I mean, you're looking at 150,000 like that. I mean, you're there. So it was a great call out by Alan. That's a huge, like, you got, even if you don't, and I understand, like, because every time we talk about Bitcoin and crypto, my email box lights up. You know, I even have like crazy people saying, you know, I've unsubscribed from your channel. You seem like such an articulate and smart guy, but when you start talking about Bitcoin and cryptocurrency, how could somebody so smart fall for something so dumb? And I just kind of delete it and kind of ignore it. But I mean, maybe I am dumb. You know, maybe buying Bitcoin at $900 was dumb. Anyway, the point is, it's not that it's dumb or not, it's that you got to pay attention. And it's okay if you don't like it. It's okay if you disagree with it, but that's the future. It's coming. Like, how many more clues and signals does the market need to bash you in the face with? Right? Like how high does it need to go? How many companies need to go public, you know, for you to pay attention to it? And it's important because you gotta lean into innovation. And the most important thing about it is it's the asymmetry of the trade is really unlike anything we ever get to participate in our lifetimes. It's like a generational opportunity. And what I mean by asymmetry is you don't need to get a lot of risk on in this. You don't need to lever up. If you just have 1% of your net worth or 2% of your net worth in this thing, if it turns and grows into a $50 trillion asset, your 1% of your net worth is going to grow to like a 10% of your net worth, right? So the asymmetry of the trade is what's important, right? It's the, you know, the investment business is about identifying and idea generation, right? This is kind of the way I was taught. It's a never-ending flow of very, very good ideas. And once you identify those ideas, it's taking action on those ideas, not with the outlook that you're going to be right on it, but when you are right, it's going to pay off in a major way. And when you're wrong, you're protected to the downside because you've structured that trade or that investment with a very, very favorable risk-reward profile. There was a really interesting interview I was watching the other day. It was on IBD Live. And they were interviewing this fund manager who has a great track record. You know, got his start trading under Stan Druckenmiller. And they're like, our traders at the firm our best traders at the firm are right about 53% of the time. The best traders at the firm, right? And to many people, you would say that's kind of like, that sounds terrible, right? Like, you do this all day, you do this for a living, and you're only right about 53% of the time. But that's the beauty of the investment business. Like, you can be wrong more so than you're right. Right? Let's say if like you're a pretty good investor, you're probably right about 30% of the time. You could still make a fortune because your winners will reward you tenfold than your losers. Right? If the trade's not going your way, you blow it out. You take your loss, you know, you take the hit on the jaw, and you move on. Big Prime says crypto is scary because the rich and poor value it the same. Andrew Donovan says Saudi looks like it's making a play to become a mover in AI with their upcoming opening office for Scale AI UAE to follow. Interesting. Let's catch up on some more of the chats here. DC322 says Amex is still their own credit card entity, I believe. Yeah, and you know, that's another thing, not to kind of jump around too much on the topics, but to your point, and this kind of goes back to consumer sentiment and market sentiment, right? This market is springboarding in everybody's face, you know, ripping 23% in 2 weeks, while you have consumer sentiment outlook the worst it's ever been. Ever, right? Under President Trump, the consumer, and I'm not, again, this isn't political, it's just what the data states. Under this Trump administration, consumers have never been more pessimistic ever. Literally ever, okay? But here's an interesting juxtaposition, which is more important than the consumer sentiment data. I want you to pull up a chart of American Express, AXP. And then I want you to pull up a chart of Visa, right? Ticker symbol V. For the most part, right, they're not the leading stocks. Hold that thought. Hopefully everybody's all right. So they're not the leading stocks in the market, but they are, I would say, in the top 25 percentile, right? American Express, stone's throw away from a new record high, and Visa is at 52-week highs, and I think it's about 15 points away from a new high. Visa, I believe, either 10 or 15 points away. I mean, what is the market telling you there, right? Is the market telling you that the consumer is really slowing down and not spending and, you know, not going out, not taking vacations? If these stocks are kind of getting bid up into the highs, I don't know. And think about this also. You know, this is another thing I kind of wrote down here, which is, by the way, this is one of the telltale reasons. And I know we're kind of jumping around in a lot of topics tonight, so I apologize. But this is another reason why I've been very aggressive in high concentration position leaders off of this follow-through day and just hitting it hard, like filling orders into the close. Look at the XLF. This is probably the most important tell. Okay, now for those of you who don't know, the XLF is the ticker symbol for the Spiders Financial ETF. So essentially all the big banks, the broker dealers, all that stuff, like Bank of America, Goldman Sachs, all that is in the XLF. The XLF is above its 200-day moving average and almost making a new all-time record high. We'll probably see new all-time record high for the financial sector within the week. That is tremendous, okay? Because you have to kind of think about the business model of a major investment bank. If you're Bank of America, Goldman Sachs, Morgan Stanley, Morgan Stanley and all the major bulge bracket investment banks, right, that make up the XLF. How do you make your money? You make your money off of fee income. You make your money off of deal flow. You make your money off of advisory, like M&A advisory. And the market is telling us that M&A activity is going to explode, that the IPO markets are going to open up again. Obviously, I mean, the trading desks at banks, I mean, are just ripping the face off of it, right? Trading desk at Goldman Sachs over the last, I mean, next quarter is probably going to be sick profits on the trading desk at these firms. But again, it's price is almost more the most important thing, because a stock is a forward-looking instrument, right? Looks forward by about 6 months. So if you have the XLF ripping, and you kind of look under the hood of the market at a lot of these major bank stocks, you know, above their 200 days, trading into 52-week highs, that's the market telling you that we're going to have a really big broadening out in the overall economy 6 months from now, right? Deregulation. I think this whole tariff thing is going to be over. You're going to start to see a lot more M&A activity pick up, which means more fee income from the banks. And I think you're going to have a big wave of IPO activity. And I'll put it this way. If the S&P 500 was up, right, like it is now, you know, from the lows, 23, 24%, but we had no participation from the big bank stocks, I would say this is a bear market rally, and you should be legging in and loading up on short positions. I'll say that again. If we had no participation from financials, right? If you actually saw like financials and bank stocks kind of faltering, I would say that this is a textbook bear market rally and you should be legging in short. But that's not the case, right? The case is that financials are like the number 2 sector in the market right now. So this is a very, very strong, durable rally. Very, very strong, durable rally. Anyway, welcome to Columbus Circle, everybody. We're looking at 1 Central Park West, which is the Trump International Hotel and Tower. And then you have the Robert A.M. Stern building right here, which is 15 Central Park West. And then here is Central Park Tower and 220 Central Park South. Hey, hang with Mark, Mom. Good to see you. Hope you're doing well, Emmanuel. This is Tom. Good evening. XLY popping today. Tomahawk says, I think you might have to examine your puts together, or who puts together the consumer sentiment report. Yeah, a lot of people suppose that, you know, this date is rigged, that date is rigged, things like that. A crypto meme, what's up? Tomahawk says, think about baseball. The best hitters are only right about 30% of the time. That's a really good way to think about it. That's a fantastic way to think about it. We're about to walk right past the Deutsche Bank Center. Which is the former AOL Time Warner Center. So what's the story with basketball now? Is this the playoffs? Is this like the finals? The NBA finals? Speaking of greatest investors of all time, I would actually classify David Beckham as one of the greatest investors of all time. It kind of sounds a little bit funny to say, but it's true. I mean, the kind of vision he's had as a business guy and investor is pretty unbelievable. He'll probably, you know, be worth several billion dollars. Playoffs, says NAB 407. Well, hopefully the Knicks make it somewhat far, right? Last year was crazy. I remember streaming right outside Madison Square Garden, and there was like a huge montage celebration. Yeah, DC322 says David Beckham is owner of Miami FC. Well, in his contract, when he came here, I think 2008 he came to the United States, played for the Los Angeles Galaxy. And in his contract, part of the deal coming to America was that he would get first pick at his own MLS franchise. And he chose Miami as the location, which in hindsight, right, hindsight's always 2020, but like, what a pick, right? What an amazing pick for a Major League Soccer team. It's almost as if David Beckham forecasted the explosive growth in South Florida like a decade before it happened. It's like insane. Yeah, and you know, as you're saying, Beckham brought Messi. Hey Kathleen, hopefully you're recovering well from your surgery. Hopefully you're feeling better. Kathleen says conference semifinals, go OKC Thunder in the Western Division and Knicks in the East. Wow. It's kind of sad to say, I don't think I can name one person on the New York Knicks. Let me try. I mean, it's sad because I should probably take advantage of all the great sports we have in New York, but I never go to any game. Big Primes Brunson. I don't know who that is. Hey, go for Hockeys. What's up? Well, regardless, hopefully New York wins it. This city is going to be crazy this summer. You guys are enjoying the live stream so far tonight, feel free to leave a like on the video and click the subscribe button if you're new. We do these streams roughly every day, starting at 8:45. Let's check out Lincoln Center. Let's go up a tad bit. SoCal Lawrence, MSG is rocking right now. Maybe we'll have to do a U-turn and head back down to 34th Street. It's just quiet up here, which I like. Hang with Mark. Mom says, Tom, I lived in New York City for 3 decades and never went to any of the games either. I was too busy hustling. Yeah. No, I get that, but at times I think I don't want to regret like looking back and being like, you know what, I was in my 20s and I never really went to any sporting events. Now, what I'm most interested in, if I could, you know, take my pick, yeah, baseball is great, right? You know, soccer's great. I played soccer in college. But I think what's most exciting to me, I really want to start to go to a lot of Rangers games at Madison Square Garden, because seeing hockey live, I think, is probably the most entertaining, in my opinion. The most physical, the most action, right? Seeing a Rangers game.
Honestly, I feel like I should.
Now, I was selling an apartment in Tribeca about last year. Excuse me. And one of the greatest goalkeepers of all time for the Rangers owned the apartment right above the one I was selling. So I would always see him in the elevator when I was showing clients and things like that. Hey, Brad's Brain, good to see you. Thanks for joining us. We were just kind of debriefing the market, kind of talking about some of the key signals that we're looking for, and really great action with a lot of the tier 2 leaders. Saw a lot of that rotation out of Netflix, out of Spotify, and you know, the tier 2 names, Uber and the like, really caught a massive bid and are really acting well. And now we have the VIX below 20, 18. Just the biggest catalyst for tomorrow is going to be CPI. Going to get it out at 8:30 a.m. first thing in the morning. Hey, Vicky Kumar, what's up? Thanks for joining. As we stroll the upper west side of Manhattan. Oh, look what's going on in Lincoln Center. Since we have the light, let's cross and see what's going on over here. What the heck is this? It's probably some movie premiere. Oh, since it was the first week of the month, I want to quickly go over the new buy list for institutions. So one of the things that I think I'm going to bring back into the show, the first week of the month, into a new quarter, you will have the new institutional buy list, which is essentially which stocks in the market or institutions accumulating the most. And very, very high up on that list was number 1 Netflix, number 2 Uber, number 3 Spotify, and number 4 DoorDash, D-A-S-H. Now I believe Dash is going to acquire another delivery company, Deliveroo or something like that. But it's kind of interesting to see this, kind of how the puzzle piece is made, right? Because we had the follow through day, the leaders are out, and then in the data, right, new institutional buys over $1 billion in exposure are pretty much all the leaders, right? So, you know, if we kind of work backwards, the smartest analysts in the world work for these institutions, right? Work for all these funds. So the analysts do the work on the stock. They go to the portfolio manager, the PM, they pitch the idea, and the best ideas get executed, and they fill those orders throughout the week. And it just so happens that really, really big institutional sponsorship in those names that we've been talking about, and the you know, the ones that are already up and out. Oh, look at this brand cast. Let me try to zoom in on this. You guys see that? What is that? Brandcast, but it has a YouTube logo on it. Maybe it's some premiere for some movie. It's kind of a bummer that they're blocking the fountain. Oh, maybe if we walk 30 seconds over here, we could understand what's going on. It says the epicenter of culture for 20 years and counting. There's only one YouTube. I guess it's some YouTube event, maybe like YouTube Red event or something like that. Yeah, the epicenter for culture for 20 years. Huh. Let's walk down here. Wow, this is a real behind the scenes look here. This is pretty cool. Joseph Hardaway's. This is an annual event hosted by YouTube. Looks great. Well, we're kind of getting behind the scenes look on how it's being built here. Hopefully they turn on the fountain as they have the musical guest performances. Jeff in Southern Tier, New York says May 14th is the event. Maybe we'll have to come on by and check it out at May 14th. Brad's Brains says, Tom, I'm Ubered up. I was beyond impressed last week flying to Vegas and to KC. Uber has got it figured out at the airports. Yeah, I'm really excited when they start rolling out fully autonomous robotaxis. But Brad, to your point, there's been a lot of like infighting in the analyst community about who's gonna be the leader and who's gonna win the race in autonomous vehicles. And I kind of take the stance that there doesn't need to be one winner. I think the market, or the TAM, the total addressable market, is big enough where there's going to be multiple competitors, and Uber has the platform, right? Uber has the infrastructure, so Uber's like an infrastructure play. And the price action, right? Some people think that, you know, Tesla, and I'm a huge Tesla fan, right? We were just talking about Tesla. Many people think that Tesla's just going to crush Uber, but then why is Uber trading at new all-time record highs on heavy volume, great institutional sponsorship? Right? So to me, I think there's going to be no winner in autonomous driving. There's going to be multiple big players, and the market's going to be massive. And I think you'll have a share between Tesla, partnerships with Uber and Waymo, and I think those will be the top dogs. And it's going to be a multi-trillion-dollar opportunity. It's going to be huge. Now, another name acting really well today is Robinhood. And you guys already know my bull thesis on Robinhood. I view Robinhood as the modern day Charles Schwab. That's the new Xtel development. Now, once Waymo kind of starts getting off the ground and it starts to become a big profit center, I think Alphabet or Google may spin that off but I don't think it makes sense to spin off that business now. Let's walk on top of this thing. I haven't been up here in a long time. It's finally nice out, so they open it up. Darren's, do I think Florida will eventually get rid of property tax? I don't know, I hope so. I mean, that would be in my best interest. But here's the thing, I'm not against property taxes. I'm against how egregious they've become in many municipalities. This is the Juilliard School. I think in general, I think it's fair that if you're of retirement age, you should have 100% tax exemption on your primary residence. So you shouldn't have to pay any property taxes on your primary residence upon reaching retirement age. Now, if you have 15 different homes, right, then you can't get that tax exemption on every single house. That's not fair, right? But at least one, right? Because most people, right, in the United States, they work their entire lives to pay off that mortgage, right? They just bust their ass. And when it comes time for retirement, a lot of people find themselves having to sell their homes because they can't afford the overhead. And I don't think that's fair, because there's a, you know, and I'm the biggest, you know, free market capitalist bull going, but there's a lot of people who have a lot of freaking money that can shoulder that burden. So like the little, you know, 75-year-old, 80-year-old lady who, you know, worked her entire life and doesn't have any debt on the house, and she's forced to sell because she can't afford her property tax bill. I don't think that's, I just don't think that's ethical. I think it's like an ethics thing. Anyway, what do you guys think about up here? This place is great. Amazing views overlooking Juilliard. Hey, another flow. What's going on? Yeah, hang with Mark Mom. Says Florida, no property taxes along with no state income taxes. Everyone will be flocking. Well, here's the thing. Florida has created a very, very business-friendly environment. But you kind of have to think about it twofold. And at least this is the way I try to think about it as we're looking at these great views from Juilliard. The property taxes at the local level, the massive influx in tax revenue should improve the public schools dramatically, especially in South Florida, which I think is a big net positive, right? Yes, you know, we complain, especially me. I complain about the crazy property taxes on Long Island. But to be fair, you know, a lot of school districts on Long Island have some of the best schools in the entire country, right? Now, is it a direct correlation with the property taxes? Maybe it is. I think that's part of it, right? Funding education. So, I mean, with this massive influx in population to South Florida, you know, I would assume, I mean, I'm not an expert on like school budgets, but I would assume they're rolling in cash. So we'll see. It's like a compounding benefit, right? The theory is the more you fund education, the better the students do, the, you know, better the educated your populace is, the better jobs they get, higher economic output, economic productivity, and then, you know, it kind of snowballs from there. Hey, Melissa 2087, what's going on? Thanks for joining. Yeah, Brad's Brain says Tesla looking good right now as well. It's back above the 200, which is great. Yeah, I think we'll, you know, since we have some more people in here, we'll kind of review it again. But, and this is like super, super critical to Brad's point. we'll talk about the Fang stocks that are above the 200-day, right? Netflix, Microsoft, Amazon, and Tesla. The way I would rank them is probably Netflix is your number 1, Microsoft your number 2, Tesla number 3, and then your number 4 is Amazon. Those are the ones that are above the 200. You have Apple, Alphabet, and Nvidia below the 200-day. So, and I'm almost hesitant, but I kind of want to remove Nvidia from that list because we've had big participation in semiconductors today. So you're starting to see this rally broaden out, allow the market to kind of pull you back in. But as a rule of thumb, I would generally avoid the stuff that's below the 200 right now, right? Because there's so many leaders that are up and out and getting support. You don't need to be spinning your wheels with stuff that's stuck in the mud, right? A lot of new and novice investors and traders, will be like, oh, I missed the boat, all these stocks have broken out, and then they go search the market for a stock that is so far off its all-time record highs, and they're like, okay, I'm gonna buy this one because, if it goes back to all-time record highs, I'm gonna make 100%. Well, there's a reason that stock hasn't participated in the rally, right? There's a reason money managers and institutional money have not rewarded that company with money, right? If everything else is getting a bid and company XYZ is not, well, that's a big red flag. So you don't want to be bottom fishing. Oh wow, the Knicks won, nice. Hey, Patrice 2020, thanks for joining us. Cindy's is high from Newfoundland. Wow, Patrice 2020s is 3-1 Knicks. So how many more games do we have to play until we win the whole thing? 34th Street right now is probably insane with crowded people right now. Bob Smith says, I heard Nvidia owns 90% of the GPU market. New laptops pushed back 2 months and counting. Price went up $100 yesterday, but still not available. To Bob's point, I think one of the most encouraging things about earnings season, that we're now pretty much 99% of the way through, was the demand for capex spending. So yeah, it's nice to look at net income and see how much money everybody made. But what I was most focused on, particularly when it came to like Zuckerberg and Andy Jassy and Alphabet and all those big hyperscalers, as I would call them, all the major hyperscalers. Now remember, just a month ago, right? If you turned on CNBC or you read an article in the Wall Street Journal, the biggest fear, right? Barron's. Even IBD was getting a little bit negative. Everybody was so petrified, right, with this DeepSeek thing, kind of alluding to the fact that they believe that spending or capex spending on AI is just going to plummet, right? Because this DeepSeek came out and they said that they built, the greatest AI chatbot with like $6 million, right? Turns out that was all a lie. But you had Zuckerberg coming out on the earnings call, throwing down, doubling down, not just reiterating and showing the market confidence that they're going to continue to spend crazy amounts on capex spending. They actually upped the amount that they plan to spend. on AI. Same thing at Amazon. So, same thing at Microsoft. I think at Azure, when they were talking about Microsoft Azure, they were saying that we just can't keep up with the demand, right? So the race to AI, the race to build the best AI, right? The race, this cloud computing AI race that we have should, right, give semiconductors another breath of fresh air. And that's why on Saturday night stream, I said, okay, you have the financials leading here, the XLF. Oh, we're almost at new all-time record highs for financials. You've had great participation in a lot of the leading stocks that we talked about. We won't go on and on with that ad nauseum. But I'm like, the only red flag that I see in this market right now is semiconductors are lagging. So I said, I think we're probably going to start to get participation this week as those leaders, like as money comes out of Netflix, as money comes out of Spotify. If that money goes into semiconductors, if that goes into the stocks, oh, this thing is freaking game on, and it's like so game on. It's like sick. Like the money that's gonna be made here is just nuts. All while the VIX has collapsed below 20. If you look at the SOX, SOXX, we're not above the 200A yet, but we're right at it. We're right at it. We had this big gap up today. Broadcom is that leader in the sector, right? But NVIDIA is not, it's not participating like I want it to be. And that doesn't mean it won't, right? I mean, tomorrow you could see another 5% up day, but until you really start to have that liquid leader NVIDIA participate and really get in gear, I mean, if you see that, that is like the last piece of the puzzle, what I would call the magic elixir. So, I mean, you have that reiteration from the market, from these big hyperscalers, that they're going to continue to spend, if not spend more, on doubling down, tripling down on AI spend, and that should provide a pretty big tailwind for the sector. So we'll see. Look at this. This is NYIT. New York Institute of Technology. Hang with Mark Mom says Amazon has robots fulfilling orders, or they used to hire someone in the warehouse. Oh, by the way, Hang with Mark Mom, you are so right about that. You're gonna love this article. Hang with Mark Mom's kind of talking about robotics, specifically with the more mundane jobs, right? Like the very laborious, labor-intensive warehouse jobs. So did anybody, holy crap, look at this view here. This is like a sick shot of the moon. I mean, the stream definitely doesn't do it justice, but that is like the most perfect full moon I've ever seen, and it's sitting right in between 157 and Steinway. That is an insane shot. I don't even remember what I was saying. That's all right. Sonny says you were right about ServiceNow. Yeah, I forgot ServiceNow. ServiceNow is a leader. I would, even though it's hasn't made a new high, it gapped up because ServiceNow and Microsoft reported within days of each other. And ServiceNow, you all know I love Bill McDermott. The two leaders in enterprise software right now, one comes from the United States, that's ServiceNow, and the other one comes from Germany, which is SAP. SAP is a freaking monster. That's why the German DAX is at a new high. 16% of the DAX is, I think, SAP. Oh yeah, robotics, there we go. So if you got Investors Business Daily this weekend, there was an unbelievable article about humanoid robots. It was just freaking unbelievable. I think I have it in my backpack, but you got to read this article. Print it out and just pin it to your wall. There was 4 separate analysts that they interviewed. I think one was from Bank of America. I forget where the others were from. In any event, I guess it doesn't matter. It was all about covering the humanoid robot market, and they're all trying to put a TAM on it. They're all trying to put a total addressable market on it and whittle it down to average unit sales for these humanoid robots. And Bank of America thinks that within 7 years, you could have like 965,000 humanoid robots being sold a year. Now, I know that doesn't sound like much, but you take that another 20 years, you know, you're seeing like tens of millions of humanoid robots being sold globally. Now, here was part 2 of the article. Part 2 of the article was talking about humanoid robot sales to the enterprise, right, to like big corporations, you know, like corporate sales, and then consumer sales. And they think the biggest market, the biggest TAM is to corporate sales, like totally kitting out warehouses to replace, you know, very mundane and laborious warehouse jobs. And it kind of brought up the fact that right now Amazon is working overtime on building fully autonomous warehouses. So these are like these 80,000 square foot order fulfillment warehouses right now that Amazon is building, and there's not one person working on the floor. It's silent, it's dark, pitch black, and these robots run 24/7, 365 pick, pack, and ship all day. Like, think about what that's going to do to profit margins, right? That's not even getting into the conversation of AI. That's just humanoid robots and automation, right? You know, it's just, I mean, the opportunity is insane. I don't have my stabilizer here, but I'm gonna kick myself if I don't share this article with all of you. Anyway, if you are enjoying the stream tonight, feel free to leave a like on the video, subscribe if you're new, and I'm gonna try to fish out this article for everybody. I think it's on page, yeah, it's on the second page. So this is probably, I mean, if you're gonna get the paper, right, every weekend, this is probably the most important. I save every article every week. I've been doing this for the past decade. Every New America, Internet and Technology New America segment by IBD is filed away in my cabinet. So Internet and Technology, great market expectations for humanoid robots, $5 trillion in sales by 2050. You can just Google this and obviously, you know, either buy the paper at your local store or just read the article. Print this article out and read it a few times, because there is alpha in this article. It talks all about NVIDIA, and it even gives some specific humanoid robot companies and differing opinions from some analysts at Apollo as they talk about what is the robotic future going to look like, right? Is it going to be robots that like look like us, like kind of like the Tesla Optimus Bot, or is it going to be a little bit different? Hold on one second. Anyway, since our streaming hiatus, I've pretty much lost every piece of the gear that I need to do the stream, so I no longer have a stand, so I'm just kind of holding my phone, propping it up. Anyway, that is probably the standout article of the week. And so the bigger picture is, what was the headline, right? 5 trillion in sales by 2050. I don't think people realize how like a ridiculous amount that is, right? So imagine if you can just capture like 4% of that move in getting exposure to something. That's a tremendous opportunity. Like tremendous. Yeah, Andrew, Boston Dynamics, yep. I think all of those companies you listed were talked about in that article. Let's start to head back down. Hey, Scott Solomon is here. What's up, Scott? Thanks for joining us. Rudy says, are these robots commercial use only? I think at first. I believe I'm in agreement with a lot of the sentiment from the article, that the opportunity is probably going to be much bigger in the commercial sector as opposed to like consumer. I don't know. Like, and again, I don't want to be too pessimistic on it, but I don't know if I'm in alignment with Elon that we're all going to have a Tesla bot in our house. Maybe he's right. Maybe he's right. But I really see more of the applications of just totally making these very mundane, stressful, strenuous warehousing jobs totally obsolete, which is a good thing. Because people really don't want to do those jobs anyway. You know, it's kind of like follow the money, right? Amazon is investing billions of dollars into fully autonomous, essentially 3PL warehousing, right? Pick, packing, and shipping. They're called ghost warehouses. Andy Jassy actually has an entire keynote on this. I'll try to find the link to that keynote, but I think it was at the Yale Club a few years ago. Here you have a beautiful shot of 432 Park in the distance. Chloe's people can treat their Tesla bots like a partner, someone to talk to when they're lonely. So that kind of goes along with Mark Zuckerberg's theory. Did anybody watch Mark Zuckerberg's interview a few weeks ago when he was talking about how the average American, and I'm paraphrasing here, so if I get it wrong, just, you know, show me some grace. But Zuckerberg was on this panel, right, talking about AI, and he's like, the average human has like 3 friends, I think he said, maybe like 2 or 3 friends, but the demand is like for 15 friends, but everybody only has like 3 friends. So he sees a world where in his metaverse that AI will replace your need for friendship, so you'll like be having friends in the metaverse. I don't know about that, but perhaps. There's a really good excerpt from this book called AI Superpowers by Kai-Fu Lee. And maybe I'm mixing up the books, but anyway, it's a good story. I've told it a few times. There was this company, this telemedicine company, that I believe Synovation Ventures was going to invest in. And they would put a telehealth device in these nursing homes and these assisted living facilities. And you know, they had a 1-800 number on the back, you know, call in case of an emergency for like technical support. And they started to get lambasted with calls from these elderly folks. And what they found was these elderly folks were not calling for technical problems, right? They were calling the number because they were lonely and they wanted to talk to somebody. So the loneliness, you could almost call it like an epidemic, is really real. And the reason why I tell that is because he kind of goes into, you know, a prediction about AI, how these chatbots will actually be able to, at some point, be like sentient beings, right? Which is like artificial general intelligence, right? Instead of having narrow AI, you'll have general intelligence, where the AI will be able to almost have a personality, right? Like kind of mimic what a human would be able to do, like tell jokes, be funny, and that could potentially cure or help this loneliness crisis. Here's the old Carnegie Deli that's unfortunately closed down now. Let's see what's up. The Knicks won, love that. Middle-aged Ryan says, I understand your stance on autonomous vehicles. Everyone on their phones while driving now is slowing up traffic. You know, I mean, all weekend I was in the Model S and the Tesla Model 3. Now, I don't have full self-driving, but I do have the autopilot. And I don't know if there's any Tesla owners in the chat here, but the autopilot feature on the Tesla is a game changer, and it is very, very good. Essentially, you press a button, right, if you're on a major highway, and it literally just takes over. It's so good and it's so accurate. And it's almost a smoother ride than if I'm driving or a human is driving. It knows when to slow down. You know, it'll come to a complete stop. If you're in gridlock traffic, it'll speed up again. It is the most impressive thing ever. And speaking of a Tesla, and it kind of makes me realize that I could never ever go back to owning another car other than a Tesla. And I don't own a Tesla. My building gives me these Teslas to drive as kind of like a perk, but it also makes you realize just how labor intensive it is to drive. You know, focusing on the road, having your hands on the wheel, it's like very, very tiresome. And you don't really realize it unless you have that autopilot capability where it's just driving for you, essentially. It is the craziest thing. And it's so safe. That's another thing. The Tesla is so safe. I don't think I've driven a safer car in my life. There's cameras everywhere. You know, there's sensors that'll alert you, you know, if somebody's coming up too fast. If you're on your phone, the Tesla will actually tell you to pay attention to the road. It'll tell you, hey, get off your phone. It's crazy. Hey, Florida boy in Atlanta says, Tesla expert here, full self-driving blows autopilot away. It will change the world. Yeah, Florida boy in Atlanta. I mean, I could imagine. I totally agree with you, and I believe you. I wish the car had autopilot, or full self-driving, excuse me, because like if it could be even better than the autopilot, like I don't even understand how that would, like I don't know how I could be more impressed, if that makes sense. Which really makes you want to go long the stock. I mean, if you really wanted to, it's back above the 200-day now. But those are the main themes, right? I kind of been noticing all the conversations in the stocks that we talk about, they all go back to the same themes. Cloud computing, AI, and fully autonomous vehicles and EVs. So if you don't have exposure to some of that, like you don't have any alpha in your portfolio. Matt says, Tom, have you heard of Waymo robo-taxis? I have. I've just never been in one because they don't have any in New York. But Waymo is owned by Google. Anybody here been into or anyone here ever try a Waymo ride in like San Francisco or Austin, Texas? This is the Manhattan. Melee, what's going on? If you guys are enjoying the stream tonight, feel free to leave a like on the video, subscribe if you're new. Mari first is saw a lady getting a few when she needed to go to the doctors. Who was driving in San Francisco traffic. Crazy impressive. Yeah, the whole thing is insanely impressive. I just don't get how people could be negative or bearish on it. Right? There's still so many people out there today that if they see one little article about, you know, this self-driving car had an accident, or, you know, a Tesla caught on fire, like they jump up and down and they're like, see, I told you it would never work. You know, this is a piece of garbage. It's so dangerous. It's like, dude, like how many accidents are there on the road every single day that you just never hear about? Right? Of course, there's going to be some issues, right? It, you know, in a technology curve, you know, there's going to be mishaps and mistakes along the way and accidents. It's like, of course. It's like, yeah, so a Waymo vehicle malfunctioned once, so let's just can the whole idea and pack up shop. Like, it's ridiculous. Like, these people need to study history and how technology advances. I am. Good to see you. Thanks for joining us. This is 49th Street now. Another thing that we didn't talk about is nuclear energy and nuclear power, which maybe we'll save that topic for another stream, but that, I think, is also a massive opportunity that I unfortunately probably won't be able to take advantage of. But there's a lot of opportunity in the power sector. Because if you think about everything we just talked about and discussed, okay? Especially as it relates to data center and AI. The number one thing it's going to require is a lot of energy, and the only way to satiate that demand is through nuclear power. And I think the French are really the only ones who are getting this right. Hopefully the US can kind of course correct, and instead of demonizing the nuclear power industry, we can kind of embrace it. Yeah, the audio is not going to be good tonight. I forgot the microphone tonight. Hopefully I'll have it back by tomorrow. It's the Hard Rock. Harry Connors, they're building a third-gen nuke plant in Utah. Which company is doing that? Constellation, I think? Yeah, Andrew's small modular reactors are the way to go. Well, the thing is, the stigma about the dangers of nuclear are kind of overblown now. To your point with third-gen nuclear reactors, it's very, very safe. Oh, you're right, Matthew. Yeah, Constellation Energy is planning to reopen 3 Mile Island again. And I think that 3 Mile Island, they're opening it exclusively for Amazon or Microsoft. I forget which one. But you're 100% right. I think they signed a pretty big deal with either Amazon or Microsoft. I forget which one. And we have Fox News. Matthews is Microsoft, got it. Greetings from Argentina, welcome. Thanks for joining. Speaking of Argentina, Argentina is another country that's really rocking. I think the Argentine ETF just broke out today into new highs. This is the New York City Diamond District. 47th Street. so clear out tonight. You can see all the way down to the World Trade Center. Indeed, melee. What the hell is that? Make a left on 44th Street. Hey, the OG is here. FDNY, what's up? Trust you're staying safe in this hectic world. Ibrahim. Oh, I think the Empire State Building's lit up for the New York Knicks tonight. But Ibrahim, I honestly haven't noticed any changes in traffic trends anecdotally with the congestion pricing. To me, it just seems like business as usual. It is getting windy though. This is my new favorite development in the city. This is 525th Avenue. Very reminiscent of 130 William. So tomorrow, we're probably going to spend the lion's share of the stream talking about CPI, big inflation data, coming in tomorrow at 8:30 a.m. So bright and early before the market opens. Wow, look at that shot of the Empire. That is a crazy view. Anyway, if you guys want to stay up to date on my market thoughts in real time and live, pretty much 24/7, 365, be sure to follow us on the X platform at Walks Wall Street. So if there's in any event that I am unable to do a live show, you can have all my market thoughts on X. how great the park looks now that there's actually leaves on the trees. Hey, Tofu Shoots, what's up? Maybe tomorrow we'll be able to get down to the West Village. All right, everyone, we'll go ahead and end it here as we're coming up to 5th Avenue in the New York Public Library. If you guys enjoyed the stream, feel free to leave a like on the video, subscribe if you're new. Remember, those are the leaders. Pay attention to the specific stocks below the 200A that are in the Fang category, which are Alphabet, Apple, and Nvidia. The leaders that are above: Amazon, Netflix, Microsoft, and Tesla. And stocks that are breaking into new highs and had great action today: Uber, Robinhood, Dash, Spotify, and Palantir. Those are the tier 2 leaders as the VIX now crashes from 60 all the way down to 18. Breadth is broadening out in a major way. Semiconductors had a great day today, and so did financials, which is probably more important and what really not a lot of people are talking about. So the XLF, we're probably gonna hit a new all-time record high by the end of the week, which is great news for the health of the financial sector. So we're in a bull market, so hang with Mark Mom. Thank you so much. Darren, Bob Smith, Mohammed, Brad's Brain, NAV407, Patrice, thank you, Daytona Gal, Darren, all of our moderators, Leanne, Andrew Donovan, Bobby B, Ibrahim Azam, Joseph Hardaway, Scott Solomon, Chloe, WH7, Philip, Soul Alchemy, Vincent 32, Con I Am. We'll see you guys tomorrow. Be safe and enjoy the rest of your night.